Will the banks say no to any Opal Tower loans? Let's have a look. Hello everyone, Florian here and welcome to another episode of Heiser Says. I found another article, this one written by Matthew Cranston in the AFR, and I thought we'd go through it because it's really about the future of the Opal Tower apartments. So, owners of apartments in the Opal Tower at Olympic Park in Sydney may have to wait at least 2 years before selling out and face losses of more than 16%, say valuers. See, now that 16% loss, that doesn't seem too bad, honestly. I thought it would be a lot higher than that. You sure it's not meant to be 61? So they've issued a lending alert on the building to their bank clients. So leading valuation firm Preston Rowe Patterson said further issues were likely to stem from the Opal Towers incident, including Strata Corporation legal actions, likely drops in rent, and increased insurance premiums. PRP is aware that at least one lender will not be taking any additional mortgage securities within development until further notice. So, with regards to banks, you have to remember they're in the business of minimizing risks. Certain banks, even if a building is perfectly fine, will only assume a particular percentage of the mortgages in that building, because they don't want to have all their eggs in one basket. They don't want to assume too much risk, and it's just how what their business really is. There is no doubt the development has suffered significant reputational damage. Parts of the newly built 36-level Opal Tower were evacuated by government authorities last week, with engineers having identified design and construction problems within the high-rise building that needed further investigation. There is no doubt the development has suffered. Yep, I've already said that. Parts of the newly built. Yeah, I've already said that again. Icon built the project for joint developer eCove. The high-profile structural failure of the building has prompted developers to reassess their own projects. The fallout of this is going to be interesting, because you can see here, well, look, now warnings are being given to lenders. So banks are restricting the flow of money to these buildings. So that's going to have an impact on the market of people that could buy your apartments if you want to sell out, if you want to jump ship, no matter how much you cut it. PRP said the cost of the reputational risk was unlikely to be quantified in the near future because there was unlikely to be any market transactions until certainty around the structural issues and potential litigation was resolved. So yeah, of course, you're not going to run and sell now, are you? Other examples of major incidents and subsequent market uncertainty have seen extended periods of up to 2 years between a major event, 2-year delay, and a subsequent market transaction, as was the case with the Botanic Ridge estate in Craigieburn, Victoria, Mr. Sugars said. The national valuation firm, which banks use for assessments for lending on properties, noted how the Lacrosse cladding fire at 673 Latrobe Street, Docklands in Victoria, created significant buyer uncertainty and saw significant drops in value. The Lacrosse fire took place on the 25th of November 2014. Since then, there's been an average loss on sale price from the original purchase price of 16% based on an analysis of 51 sales. So from 2014 to now, it's gone down 16%. That's not good in property over 4 years. CoreLogic records the 5-year change in median price for a home in the same suburb as 3.2%. So it's, oh boy, nearly, more than triple, quadruple times, 5 times more of a loss than the rest of the suburb. Wow. Mr. Sugars said the real issue was in buyer confidence. Yep, it always is, isn't it? It's just a confidence game. And citing the average time on market in Lacrosse since the fire being 169 days as opposed to the suburb average of 73 days. It's interesting, I had a subscriber send me an email asking for some advice on going with spec homes. And I have to get to reply to him, but I'll mention it here because, you know, you're comparing a large, complicated building like this to a spec home. And I think the risk with the spec builders because they've got it down to a fine art, like a real fine art. They squeeze every penny where they can. The biggest risk, I'd say, is is of insolvency, is when they take on too big. You saw what happened to the one of the over and over, just historically, all the big builders doing residential, spec homes, and they'll go bust because they're financially spread too thin. That'd be what would be the biggest risk. You're not going to have these type of risks on a standard house that they've done hundreds of times again and again. Maybe they're bringing in dodgy products, like with the masters wiring, but it wouldn't be the same as a complex engineered building as a spec home. So individual units in the Opal Tower were selling for between $510,000 for a one-bedroom apartment. One bedroom for $500,000. Wow. To $1.8 million for a four-bedroom, and an average sale price of just over $858,000. So, the banks are starting to exert some control on the purchasing power of this apartment, or this tower. They've got more control over the construction industry than a lot of people will actually realize. They control a lot of things. And, he who has the money has control. That's essentially it. It'll be interesting to keep following this case and see what happens with the tower. I mean, would you buy there, guys? How much of a deduction would you want before you took it there? Would you take one for half price? Would you take the risk? Maybe not. I don't know if I would want my family in there, to be honest. I don't think I'd take the risk. So guys, thank you for joining me for this episode. Please like, share, and subscribe. And I will see you all again tomorrow. Bye for now.